Hey Doc, Sean Duncan here with SMD Consulting and Accounting. We're here to help you out with business, tax, law, wealth management, various different bits of advice. Today, I want to talk a little bit about the sole proprietorship and how it affects you. And a lot of people, you're sitting there thinking, I don't have a sole proprietorship. Why do I care? Hold on, you might and not even know it, but let's just touch on some high points. First though, let's do the disclaimer. Okay, disclaimers out of the way. There are so many different complexities to entities, entity choices. In general, the IRS tells you there's four. There's a sole proprietorship, there's a partnership, there's an S Corp, there's a C Corp. And we're going to touch on all of these over the course of this series and all the sub nuances in those. This stuff is complex, so don't feel like you're overwhelmed. Take it in these small bites. That's why I'm doing the video series the way I am. Let's start with the easiest, and that's the sole proprietorship. The sole proprietorship, think of it as this simple. You were in school and maybe you knew that kid that would sell, Tootsie Pops or something and make $10, $50, $100 a week selling everybody else suckers in school. That's a business. That's a sole proprietorship. You don't even have to do anything formal to suddenly become a sole proprietorship. This, in most cases for you, it's the 1099 income. Did you get popped for some locums at another institution? Are you an ER physician that gets 1099 income from multiple hospitals? Do you just accidentally do a little bit of a side hustle of some kind? You might even be a painter. Anything where you receive compensation without formally structuring an LLC, an S corporation partnership, something like that, you're a sole prop. There is an exception as it relates to general partnerships. We'll touch on that later. So why does this entity type even exist? Because it's easy. It's easy. There's very few rules per se in setting one up because like I just said, it just appears the moment you start making money. But the challenge with this is there are strategies and risks around that. At its core, we're going to start with risk. Now again, disclaimers told you that I'm not giving you legal advice, but let's just talk about the concept. When you are a sole proprietorship, that means you are individually going out and doing whatever you do. Providing medical advice, right? If you're going to give somebody advice and they've compensated you for it, you immediately have a responsibility and a liability that ties to that. And here's the whammy. If maybe you just do this a little bit, I just do a little bit of locums, I just have a little bit of work I get from 1099, it's not that much money, and my real money is this other thing. That sole proprietorship without any asset or entity protection means you are personally responsible for all of the activities and the liability and risk that comes with that. In other words, you can be individually sued and you are the back door to all of the assets that you own. Did you want them to come seize your partnership income because you gave advice to somebody and they paid you back in pizzas? I know that's a silly example, but that's still compensation. You got to be careful of this stuff. People love to sue. I know you've never heard of that before. People love to sue doctors. Yeah, I know. Shocker, right? How can we protect you? And so when you go out there and you get a 1099, immediately contact your lawyer and CPA to figure out, is there a better way to do this? Because just the liability alone exposes your partnership income, exposes retirement accounts, there's limitations, it exposes your kids' college funds, it exposes everything. I don't want you to have that happen. Now we're going to turn a little bit to the accountant side of the world. Okay, I've already scared you and that was not my intention, but it is partially my intention because I need you to understand how important this is. Way too many people don't think this all the way through and they go, it's not that much money. It doesn't matter about the money, it's the risk. But then secondarily, tax strategies. How you go about writing off against that income. Believe it or not, depending on where we choose to put the deductions can have a greater or lesser impact. Did you know that when you are a sole proprietorship, state laws notwithstanding, if you're in different states, we have lots of clients in other states, I'm not even talking about state income tax. There is both income tax and employment tax assessed to that. Let me repeat that. There are two taxes that are going to hit you when you're a sole proprietorship. And that second tax, you're probably expecting income tax, right? But the second tax, that could be as high as an additional 15%. Now, I don't know about you. If you're already in a 37% bracket and you might already be paying California income tax, Wait, Sean, you're telling me there's another 15% that might hit me? Yes. So when we're talking about tax deductions, when you're incurring your expenses, did we do your CME expenses under the sole proprietorship that has 2 taxes, which means twice the savings? Or did we do it under your partnership? Did we do it under your S Corp? Understanding these entities really changes your tax strategy. So keeping it super simple, because that's the point of the whole Hey Doc series, is to give you quick little snippets to think about. When you are a sole proprietorship, you have full personal liability for all of the activities of the business, including your advice. And yeah, you have malpractice, but check with your malpractice carrier to see if they even cover the 1099 stuff. Your policy might be under your organization and not cover these extra activities. Secondarily, you have tax implications. The wrong entity type can actually cost you more in taxes. So when you get that little 1099 and you're thinking it's no big deal, don't freak out. Proactively manage it with your professionals. Sit down and have that conversation. Okay, is this the right way to do this? Do I need to do an LLC? Do I need to do a corp? We will guide you through that. And again, back as I referenced on a previous video, make sure your lawyer and your accountant are actually working together to help you with the advice. Hey Doc, I hope that helps out a little bit and gives you a little more information to make decisions.